Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading, take a look at hot spots in the markets. Today is February 15th, Tuesday, February 15th. I'm Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Let's see. Actually, you know what? Let's just kind of go high level. Good morning to everyone. Uh, what we've got going on this morning, and there's slightly divergent news, but the big news really is it appears things are starting to de-escalate between Russia and the Ukraine as Russia has started to pull back some troops. That's number one, although they're still continuing exercises. But what have we seen? We've seen oil immediately start pulling back. And we are going to talk about the price of oil and what that has meant to Russia. But we are going to take a look at oil and then equities. Equities all looking to be in the green. Markets up mixed, but roughly around 1%, maybe a little less than 1%, looking to open solidly in the green. Now, I said there was a little bit of a mixed message, is that we do have the PPI numbers that came in, the producer price index, and their wholesale costs to produce things have gone up a full percent, expected to come in at an increase of 0.5%, came in at a full percent, so double what it was expected. And you know, the markets might shrug that off today with the Russia news, but when you think about that, that just really plays into the difficult inflation story that we keep talking about, because those prices, where do you think they go? They're going to go right into the costs that get passed through to consumers. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, I'm just going to do a quick peek, and then I'm going to let Brian really get into it. But it was interesting. I brought up the chart of oil, and we can see that if I'm just going to space this out a little bit so it's easier to see. I think I brought it in. There we go. One, in the overnight session, oil sold off. Came down from $95 a barrel all the way down to below 92.
All the way.
Yeah, all the way down to below 92, which is still ridiculous.
Super cheap now. Super cheap.
It's just kind of crazy. The interesting thing here, let me actually drag. This is a level we had marked off from before. It was a Fibonacci level as well as a support and resistance level, supply and demand level that we knew was here around 91.65, between 91.65 and 91.70, and oddly enough, it came down, touch it, and then we've got a little bit of profit taking here, but it bounced right off of it. Question is what might happen from here, and we'll talk about that. But the U.S. retail trader has not had an opportunity yet to step into the de-escalation of Russia. So we'll take a look at levels there, and we will also take a look. We're going to have to go through all the equities because they're all looking solidly in the green, which is kind of nice. But we'll take a look at levels there as well. So, Brian, let me flip it over to you. And I know that there's some other things you wanted to throw in there, but we'll take a look at oil and then we'll take a look at equities.
Yeah, I mean, I would say that's the most positive news we had this morning, and there's a lot of things about 5-6 hours ago talking about how there's signs of de-escalation. Russia yesterday, and again, remember, if we follow suit from what they've done in the past, one day is a good thing, the next day is the bad thing. So, just be prepared for that. I don't think the crisis is fully over yet. And there was comments where this morning there was all talks about, well, if they don't join NATO, but they were very persistent upon that they're still joining NATO. They're not changing. So there needs to be something that Russia's getting out of it. But they are pulling troops back on the southern and western fronts. Most of the people assume, though, it would come from the Belarus side on the northern side, I guess. So, again, the southern and western armies aren't that big of a deal. And, at the same time, some armies are pulling back, but Russian naval aircraft are practicing strikes on warships in the Black Sea. So it's not that it's over, but it looks like it could be moving that direction. One of the things that Todd and I were talking about, and it seems to be in the news a lot this morning, is talking about how much they've profited from sending troops to the border. And if you say, what do you mean by profiting? If you take it back, and again, we'll look at just oil here. Let me bring it back to like a daily, just so we can kind of get a better view of it. If we go back to the beginning of the year, and I think this is important to bring up, right? Just going back to the beginning of the year, we have prices down here. Let's see, January 3rd. They're about $75 a barrel, right? I mean, they were kind of pushing down. And again, I don't have the exact date of when the Ukraine situation started, but just take it from the beginning of the year because we've been dealing with it for about a month, like the heightened tensions and trips and things like that. Oil is $20 higher than most likely it should be right now. And if you think about how much oil, and again, Russia is the number 2 oil and gas producer, so they do a ton of different energies. But let's just talk. And again, natural gas is high. Just talking about oil, they produce about 10.5 million barrels per day. So do just some simple math. The 10.5 million barrels a day times the $20 increase, they're making in excess of $200 million every single day that they've been dealing with this crisis. Are the tanks burning $200 million worth every single day? No. Are the warships taking it? No, they're all nuclear. So, when you talk about profit, and again, all he did was send troops to the border, right? I mean, they're paying to do this stuff with
For
those
all
troops.
we know, that was his end game anyway, was just to start
Could have been
accumulating some more cash. Yeah.
Because, I mean, think about what they said, too. We never said we were going to do anything militarily. All we were talking was sanctions, which means economic sanctions. But they've been able to slough off sanctions in the past, and they just padded their coffers with, I don't even know. I mean, figure, what? Do this, do even more math.
A few billion.
I've only had half a cup of coffee. I can't even do it right now, right? 200 million times 45 or 47 days or whatever, worth since the beginning of the year, whatever it is. So that adds up to a lot. I mean, you're stacking your coffers if you want to do anything in the future. So it's one of those things that, being part of OPEC Plus, they've controlled. I mean, if we go back to the cuts back in October, November, when it was like $60, this would be even more. Russia's been the center of this energy story for a while. We started it with canceling the pipeline, and the inflation took off, and then we started to put sanctions and demanding things of OPEC, and OPEC basically said, no, we're doing it our way. You just gave us all the power back that we had eroded. Yep. Now we have $96 oil, and we have a guy that's basically lining his pockets now by doing nothing but sending his own troops to the border.
It's an extra $8 billion.
$8 billion, yeah. For an economy the size of Russia's, $8 billion is a lot. So
for anyone,
it's one of those things, guys. It's all about money. It all adds up somewhere else. But the oil story. I mean, again, obviously pulling those tensions off should have been great. And thus far it has been. I mean, the euro was up a little bit again. It takes some of the the VIX is down 7%. Oil, really since a lot of the data started coming in about 1:00 this morning Eastern time, we had a level that we talked about, a break of this 94 level. It did. It finally did break. It sliced through, right? We had that kind of this Harry Potter trade set up here, and it did. It gave us the Harry Potter entry sooner than one expected, right? And then what happened is it sliced through and actually based right at the level we talked about for the upside target. And then you can see actually we just rolled off the 61.8 as well as a level that we talked about yesterday, where that original trade was to start off with. So it's been pretty decent. Right now I would say that we do have a little bit of a sticking point at 93.63. For the most part, though, I think, if you think about it, the traders, the U.S. is coming online. We got PPI data. It's costing more to, again, where does that cost come from? That a lot of that is transportation as well. So again, that means we're using it. Our economy is not in a bad place, so it has every reason to continue to go higher today. So even though, again, remember we hadn't actually cut any supply from Russia. It was kind of like, well, hey, maybe we will. Doesn't mean that other people couldn't have picked it up. There's no reason why it really needs to drop at this point, because it wasn't like, Russia was like, hey, I'm just not going to send you oil. No, it's their cash cow. They're not going to just stop sending it. It was us not buying it from Russia. We just produced them somewhere else. So I think overall, I hate to say it, with the current demand and where price is right now, unless OPEC doubling supply or doubling the increase every single day, there's no reason for oil really to take a tumble all the way back down again. Russia's not that big of a, they produce a lot. But again, it's the consumer, and seeing PPI numbers, and it didn't just miss; it was double. It was double. So everybody that's over there saying, Polar doesn't know what he's talking about, he's crazy. Guess what? We just doubled the cost of double the increase. It was 0.2 last time. It's accelerating. It's not slowing down. So Bostic is clueless. The White House talking about it's under control. The Fed. Bullard's the only one it's telling us what the facts actually are, and I mentioned it before. Jamie Dimon sitting somewhere saying, I told you so. Told you so. Told you so. So, that 50 is, when I was saying 50 back in October, Aaron's like, nah, there's no way. Now it's almost guaranteed that the 50's here, and the question is, do we get that 100? So Bullard gets his 100 by June.
Can we get 250s back to back, March
It's
and
getting
June?
a lot more likely at this point. Again,
Yeah.
we're already at 40-year highs, and it's accelerating, and we're going into election year. So it's kind of crazy, but this is a big number, and it will affect the charts today. And in the grand scheme of things, I mean, right now we can see like we've pulled up the different levels. We had a small level here at the 50, but again, that was 2 o'clock in the morning. Not many traders. We're at the 61.8 now, flirting, and we just got a PPI number. Could this be falling today? I would say probably a good scenario, because again, those costs will be passed across to the consumer. And again, we're not pacing inflation at this point. So again, I would say that there's a potential for the ES to run all the way back down, which coincidentally happens to be, by the way, the 23.6 would be the 43.95 level. NQ is actually at that 50% right now. This is the level we gave you guys yesterday. Unlike the ES hit it at 2 o'clock in the morning. This one is hitting it at 7:30, 8 o'clock when futures traders are coming online. So this one does make a little bit more sense to be short in. With the news in, though, at this point, you're over a 1-to-1. You'd want to lock in some profit on this one. Maybe move your stop loss to break even if you're in the futures market. But you can see right now there's not a lot stopping this until we get down also to the 23.6, right where the takeoff was, down at 14,278. YM, also in a similar situation. This one I hit it at 3 o'clock in the morning, 3:30. So again, not really the ideal place for us to take that short. We were looking for it. You can see, though, that when the news came in at 8 o'clock, though, it was at the 61.8, and that one is starting to roll forward. So you could have had an adjustment on this one saying, hey, listen, I already know where to level. Let's kind of figure out where it's basing. Actually, let's drop it down to a 15, maybe a little easier. Yeah, there we go. You can see that we kind of had this stall, right? This hold. News came out right here. And now we're pushing back to the downside. So you could be in a short in this one as well. And again, this is why some of those call spreads, and again, if you can get a knockout pretty close, not too bad. For news, this one is also at a 1-to-1, and you can see the 1-to-3 target is the last time right here where buyers actually came in at. This just happens to coincide with this. So again, could be another smooth sailing if you're already in the trade. And Russell also looks very, very similar. Now, again, the Russell ended up blowing through the 50 and the 61 at 3 o'clock in the morning when there's not a lot of futures volume. And again, that's kind of, Russell's great. It's not one of those ones that you would have been targeting. These levels are for a really U.S. session. I know futures traders love to say, it's a 24-hour market too. No, it's not. It's not the same as currencies as a 24-hour market. The factors that drive it in the volume that actually exists at 3 o'clock in the morning in things like, the ES and the YM and NQ, it's just not there.
That liquidity isn't fully there, right?
Yeah, and that's when the liquidity's not there, the spread's bigger. It's easier to kind of for whipsaws back and forth again. It's just more dangerous. But this one was at a 78.6 right around 7 o'clock this morning, and then when news came out here, you can see that it was at a level where it was also looking to drop, and it kind of has a similar formation, right? You had a parabolic move up, a level of basing, it kind of went higher. And then news came out and it drove it down. So if we get that base, there could also be an opportunity to get short the Russell today. So kind of the same. They're all, all three of them are more or less the same, right? And again, the pop point was really down here at the 23.6 from that down draw.
Yeah.
So more or less all the same type trades. Those are the ones you need to watch out for as far as the indices go today.
I guess
we do have a meeting today at 12, or we do have a.
Oh yeah. I was going to mention that. I dropped that link into the chart. Into the chat, into the chart. There is the full blown session in 3 hours. So after the open, after we get an opportunity to see what the retail trader is thinking, we did have this run up in the equities as Russian tensions seem to ease. Everything's rolling over a little bit from there. Now the question is that just profit taking from overnight, or was this just an opportunity to get short with? We certainly didn't have pretty PPI news.
Yeah, and guys, PPI is worse than CPI, and the reason why it is because it's the finalized cost of what it costs us producers. So if they do not change their prices, it means it lowers their profits. Yeah. If most of the time it means that they raise their prices, which also means that people are going to be buying less
of it,
which lowers their profit margin. Or they say that inflation is here, we need to raise interest rates, which also make people spend. So it doesn't matter which way you slice it. It's not just inflation. There's inflation, but we're getting paid more, and that's healthy. Yeah, PPI is the one that we definitely don't want to be higher. That is the one it's like a trident. It's a triple-edged poking weapon, right? It's not a good one that you want to see being, especially double what the forecast was.
No. So that's certainly. That's that good news, bad news thing that we had going on that we mentioned right at the top is that it's a trick. It's a trick. We got some good news that the tensions are easing, but the PPI number really is a bit of a wallop. So with that, I had to flip this over here. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian's and my email are both there at the bottom. If you got any questions for Brian, please feel free to email him, support@keeptradingsimple.com. A quick recap of what we went over today. We do have the Russian Ukraine situation appearing to ease. We saw oil come down right to a level that we had knocked off before. Oh, and then yeah, equities. I do mean indices. Equity indices. it's, yeah, and we are seeing equity indices. They took off overnight. We're seeing them roll over a little bit. Don't know if that's just a little bit of profit taking, or if that's people also taking a look at that PPI number and also realizing that this there's a lot of different things to weigh when you're looking at the markets. Brian, now a reminder, if you're not registered, I dropped that link in for later for 3 hours from now. Please register. A full-blown session after midday, so we'll get a glimpse at what the retail trader, the U.S. retail trader thought, and then also take a look forward for the rest of the week. Hopefully you can join us then. If you can't, please join us tomorrow morning. If you like what we're doing, hey, give us a like. We do appreciate that. And good luck in the markets, everyone. Hopefully we'll catch you in 3 hours. Otherwise, tomorrow morning.